So hello friend, in this video I'm going to talk about selling your inherited property and taking money abroad. What is the procedure? Specifically, if the money involved is quite large. You know that in every year under LRS scheme you can take not more than 2.5 lakhs USD outside India without taking approval. But there is a way you can take a bigger money if suppose the estate you are selling or property you are selling is bigger. How you can do it? All these things I'm going to tell you in this video. So let's begin. So friends, generally I get some questions or queries from those people who are either they have already shifted the complete family outside India and they want to settle their assets also there for easy management, or maybe the previous generation is not around and now the next generation which is already settled in abroad in a different country, they want to take all the money there because they just want to manage everything there itself. So in that case, what happens generally, some cases the property is big and like suppose 18 20 crore, and in that case they don't want to wait for say 8 or 10 years to take money abroad in like small installment like 2,50,000 USD every year, and they want to expedite this process. So all these things I'm going to tell you in this video itself. So if you have such kind of plan, or somebody in your friend circle has a such plan where they want to move all the assets abroad, they should definitely watch this video. Now, the very first part, I'm going to divide this whole video in 2 or 3 segments. First segment, what you can do when your parents are around and they're in India. Second segment, I'm going to talk what you can do when your parents are around but they're abroad. Third segment, when your parents are not around and then you have to do everything yourself, how you can proceed. So let's talk about segment number 1. When your parents are around and they are in India. That case, the first important part, you have to ask them to make a will when they're around. Because what happened, it will make the process much smoother, much more, you can say, easier. Because in case the will is not there, getting a court order, probate, and shifting all the, you can say, assets, bank account, everything on your name is quite a task, and you have to stay in India for quite some time. So as a, suppose if you're working abroad, it will not be a feasible and possible for you. So always nudge them. Of course, you have to request them. You can't do more than that. Always nudge them that if like already they are in old age, like 70 and plus, so at least they should have a will and they should clearly demarcate what and who will get what. So if there are siblings or other contenders, everybody should get a clear cut what they will receive when the parents are not around. And in that case, get the will registered, because a registered will is, there's less chances that it will get into legal tussle. Unregistered will, it can be taken to court for its originality or originality, whether it's genuine or not. But if registered, these all problems are not there. So first step first, if your parents are around and they are in India, at least request them that do this when they are around. Other things like maybe some assets that you can, suppose they want to gift you, why to wait when they are not around? If they want to say suppose shift some money, or maybe they want to sell some property which they're not using and send money abroad, ask them to do it now, because that will happen easily. Then you are coming here now, when your parents are there, most of things they can manage with the help of 1 or 2 agent or maybe legal representative, and they can easily send money to you and you don't have to do a lot of things. Other good part is that if they sell the property in a phased manner or installment way, will be very easy, because it can easily fit in 2.5 lakh dollar per year and they can send it. Of course, there will be TDS deduction of 20%, but they can file their return, and if there is no income, they can claim the whole amount as a refund. So please remember, if TDS is deducted, it's just an advance tax. It is not a final tax. It is not a lost cost. So it can be recovered. If they do with maybe whatever asset which they feel like they will be shifting to you when they are not around, if they can do a little bit of them when they are around. Of course, they cannot do, or they should not be doing the property where they are staying, because they have to stay, or the money they require for their day-to-day activity. But maybe like they have 2 3 other properties which is just on the rent, and they're not depending on the rent dependent on the rent. So you can request them to sell that property and slowly they can shift money. This will easy for both, and as it's a phase manner, it will be easier to manage also. So first condition, you can of course do that. Second condition, if I talk about when your parents are around and they are abroad and they don't want to come back to India due to maybe old age or health issues or anything else, in that case, of course, you have to take the lead. The first thing first, of course, is about the will. So they have to make a will. They should register in India. Now they can make a will in US and they can register with the any Indian consular service. They can access the consular services and they can register there also. It is also as good as registering with sub registrar in India. That will avoid that unnecessary claimant when they are not around. Second thing, you can sit with your parents and you can plan instead of one shot. You can, because they are around, and if you are not in hurry of taking money abroad at one shot, because it will be slightly more cumbersome, so you can plan how money will shift. Like you start with the property, then slowly with bank account, then maybe stocks and all this. So you can plan and you can slowly shift it. You have to really make an exit plan, and if you want, you can discuss that with us. Other thing, suppose if you want to sell everything at once. Why I don't say this, because what happens when you're planning to sell everything at once, you definitely will not get a best possible price, because there will be other factors which generally comes into picture. Maybe the stock market is down, maybe the property rates are not that great that time. So always plan so that you can get a good rates for your property, and nobody will feel like that you are in rush, because when they feel that you are in rush, most of the time the property will get discounted at least with 10%, 20%. So it's possible. So always plan and never mention somebody that you are in rush. The another scenario can be where you want to sell everything at once. Maybe whatever reason you don't want to get into, you don't want to wait, or maybe there is a better investment opportunity abroad and you want to bring all the money and invest in that particular investment opportunity. In that case, what you can do, you can plan selling all the assets as you are exiting India. Now, again, I'm telling, as you are exiting permanently from India. In that case, what happens? You sell all the property, put all the money in another account, and then you have to file your income tax return immediately. You don't have to wait. You can file your income tax return same year also. It's possible. And third, you have to take a tax clearance certificate. So after filing all the taxes, you have to apply for a tax clearance certificate. And with the tax clearance certificate, you can take all your assets at once. So if there is a TDS rate applicable, of course that will be there, but you can claim as a refund. The only point is this: if you are permanently shifting all your assets at once, you can take tax clearance and you can apply for even a bigger amount, like shifting abroad. You don't have to wait, or you don't have to wait for 2.5 lakh dollar every year. Is it possible? So always, like if you want to apply, want to know more about what is tax clearance certificate, how it is applied, you can write in comment section, and I will definitely, my team or me will reply about that. There is a procedure, and this is basically used when the person is permanently shifting abroad and they do not want to maintain their assets here. Now, last option or last scenario I told you, when your parents are not around and then you have to shift money. Now, again, there can be two situations. One situation where your parents already have a will, so you just have to implement your will. There may be people who are going to support you with that, and if you already, your parents have already appointed somebody, you have to take help of them, and as per the will, the property will be divided. Now it is your property. So in earlier cases, you can sell the property as on the name of your parents, but once the will is implemented, it first become your property, and then you can sell and take money abroad. So again, in that scenario also, when already there is a will, you can sell the property. If it's a big estate, you want to take it abroad, you have to file your return, you have to claim for tax clearance certificate, and then you can take your whole money at one go. Last scenario can be where the parents has not made any will. Now, in this case, if there are siblings and other people who have claim in that property of your parents, then you have to first sign agreement with them, which is called a settlement agreement or family settlement agreement, and everybody will specifically provide that what asset who is going to get, and then from there you can then own that asset, put that asset on your own name with a court order or settlement agreement, and then you can sell the property, you can take the tax clearance certificate and take money abroad. So basic idea of telling all these things, that 2,50,000 USD is not the amount which you can only take abroad. You can take a bigger amount if you follow the tax clearing certificate, where generally which is provided if somebody is shifting permanently from India. This certificate is basically issued to foreigners also, and as if suppose you are already settled abroad and you got the passport, so you are overseas citizen of India, but you are a foreign citizen, so you can apply for tax clearance certificate, and then you can, whatever amount after paying taxes and everything, whatever amount is there, you can take all that amount in one go also, regardless of how big is the amount. So I think you are clear now about how to handle your inherited property specifically in the different scenarios. So any more question? I'm waiting for your questions here, and please put here. And if you like this video, please subscribe, please share, because I need more views as to get it motivated, keep myself motivated to make more and more videos. And that's it on this video. Thank you. Have a nice day.